Hi everybody, Scott Miller with River City Mortgage and Financial. Welcome to this week's Market Minute for the week of October 19th, 2009. A lot going on over the last couple weeks if you've been following this, especially if you've been following interest rates. 2 weeks ago, interest rates ended very positively. The market was doing well. Some of the economic data, we had rates in the upper fours and things looked like there was going to continue downward. Then all of a sudden last week, the Dow cracks 10,000 for the first time in a year. Some of the initial weekly jobless claims weren't so bad. So all of a sudden we see the rates going up rather quickly. Now you're in the, pardon me, depending on your score, loan type, somewhere in the lower fives. And so this brought up a lot of stuff to talk about today and trying to keep it down to right around that 3-minute mark here. But our economy is really based on housing. Quite a few years ago, for history, rates or housing values always increase, always go up. It's just almost a sure positive thing. Obviously, the last 2 to 3 years, depending on when you want to start the measurement, we've had softer housing values dropped, and you've noticed this if you've tried to refinance and had value issues, or if you've tried to sell your home and you may be upside down on that. We're finally seeing it's a true financial market, and there's ups and downs, and it's making nervous right now. The key to our economy is home sales, people buying houses. Doesn't matter if it's first-time home buyer or even move-up buyers. But when people buy a house, they improve it, so that helps the economy that way. They buy things for the outside, do different hobbies and stuff around there, so it really stimulates the economy. What I want to remind everyone right now is that rates are very low historically. For 187 out of the last 211 years, rates are below 7.5%. That's phenomenal. So if you're even thinking of buying, now is a great time. And I want to caution people on getting too greedy. We got greedy a few years ago when we buy houses and we wait for the, we kept thinking it was always going to go up, and sometimes we paid too much for the house, and this includes everybody, including me. And now we're seeing where it's going the other way. Now we always think the houses are going to continue downward and lose their value. The data says something different. House values in the Twin Cities have gone up from March till now. We've seen the average or median price go from 157 to 175. So everything is starting to go up. And I wanted to share this with you. An average loan size is right around 180. So if you take a $180,000 mortgage and 0.5% on the interest rate, if the rates go, and I just use 5 to 5.5, doesn't matter, it's just 0.5%. But a 0.5% interest rate increase is equivalent to a $10,400 increase in sale price. So while we might be waiting to save $1,000 to $3,000 more on that price, if the rates continue upward, we're actually losing money on that. So don't get too greedy. In fact, I would say if you're looking to buy a house, I want to be your lender. So give me a call at 763-509-7400. You can also reach me via email. My address is smiller@rcmortgage.com. But make sure you make an educated decision. Understand what data is coming out this week that's going to impact interest rates. Understand what the Fed's doing right now to currently lower rates, and that is scheduled to end in the first quarter of 2010. So there's a lot of things out there. Just make wise, educated decisions. Thanks very much, and have a great week.